Available inventory of unsold homes is building each week now. Are these signs that the market is slowing as mortgage rates rise? Is it just normal spring season? A little of both? So that's what we're on the watch for. Every week, Altos Research tracks every home for sale in the country. We analyze all the pricing, all the supply and demand, and we make that data available to you before you see it in the traditional channels. I'm Mike Simonsen. I'm the CEO of Altos Research, and let's see the details for the week of April 18th, 2022. Available inventory of unsold single-family homes rose 3.6% this week to 271,000. That's a nice jump from last week, although the jump is actually quite common for this time of year. So even though inventory is rising faster than last year at this time, we still have fewer available properties and more competition among buyers. Our inventory forecast anticipates that we'll cross the line to have more inventory year over year by July 1. If the inventory buildup accelerates and we get our year-over-year gains before then, that would be one way we would observe the market slowing. As of right now, inventory gains are following a very typical seasonal pattern. And assuming that they keep following that pattern and we've finally broken out of the unusual pandemic cycles, then July 1 is when we'll start having year-over-year growth in inventory. So you can see at the far right end of the chart here, we've started climbing up the curve, and that growth will continue through mid-summer. For greater detail on our inventory forecast for the year, check out the hour-long webinar we hosted last week. It's available on the Altos Research YouTube channel. I will link to that at the end of this video. If you didn't have the chance to join us for that live last week, you can rewatch the replay. Okay, let's go through the rest of the data, and then I'll link to that webinar so you can catch that recording. Home prices ratcheted up to a new high again this week. The median price of single-family homes in the U.S. now is $420,000. That's a little over a 1% gain from last week and staying 10 to 12% higher than last year. 2 years ago this week, we had already passed the 3 weeks of price correction at the start of the pandemic, and prices had ticked up for the first time. If you go look at our Altos Research videos from that time, you'll see how shocked I was. Everyone assumed that the housing market would tank with the recession. And in fact, in the summer of 2020, the forecasters who were using econometric models that use factors like unemployment and GDP growth to project home price changes, those guys were still forecasting home prices to drop well into late summer, even when they were already obviously rising in this data. So it's a fascinating lesson. Even as we were literally measuring home prices actually climbing with buyer demand each week at that time, we could still hear a lot of forecasters predict that home prices must tank because massive numbers of people lost their jobs. But you lose your job and you can't buy a home. But it turned out in retrospect that the people who lost their jobs were lower wage service workers. These are people who were already locked out of buying homes in the US. So the pandemic recession hit and real estate demand actually increased. And in fact, that demand increased before any stimulus hit the economy. Who knew that was coming? I certainly didn't have the foresight at the time to predict that it was going to happen. But the lesson here is this. So we can measure the real estate in real time, and that's what we do here. A lot of real estate data is really old by the time it reaches you, but we measure it right now. And there's a lot of variables that you don't know or can't measure when predicting the future. So while interest rates are rising and there are the chances that this booming economy falls into recession next year are also rising. Those factors alone, it turns out, don't tell us where home prices are heading. And what we know right now is that we have a massive imbalance of demand over supply. So when we look at the price curves over time, here's what it looks like. Each line here is a year. You can see that we still have 6 to 8 weeks of rising home prices this year before they hit their natural summer plateau. You can see how prices are staying 10 to 12% over last year at this time. The real oddball year in pricing was 2020, the tan line here. You can see that initial pandemic dip and then recovery, and then demand stayed high well past the fall and didn't recede like they normally do in the fourth quarter. So this year, expect 435, 440,000 for the median home price this summer, and keeping our 10% year-over-year gains. When the effects of higher mortgage rates kick in, we will see it in this number. And later in the year, we could see these price gains compressing finally. We will report it when we see it happening. Speaking of demand imbalance, we had 31,000 immediate sales this week. That's a nice jump from last week. More homes are coming to the market, and they're still closing immediately. Multiple offers, transactions happening very quickly. The headlines are very sensitive to any signals that demand is slowing, but this number sure doesn't reflect it yet. Last week, we said that maybe the light red portion of the line was shrinking as a fraction of the new listings, but it rebounded this week. The Twitter and YouTube comments from our agent audience sharing anecdotes about their bidding wars, they actually corroborate the data here. You can see at the far right end of this chart, as the dark line grows, that's active inventory building. But until the light red portion shrinks, that's the market telling us that buyers haven't backed off yet. Almost 100,000 new single-family homes hit the market this week, and about a third of them are already in contract. If there are any signs of demand slowing, it's maybe here. This is the price reductions curve that we've been watching carefully. Again, each line here is a year. You can see that our price reductions this year in the dark red line are definitely running above last year, but they're still very low. And the curve, where the price reductions are climbing in April, is totally normal. Last year was the oddball. Again, 18% of the homes on the market have taken a price cut, and that's below what you'd normally expect for about 30% this year. And we know that demand is way stronger than supply. Therefore, very few sellers are taking a price cut, even if that is inching up each week. We also know that as spring transitions into summer, price reductions will climb. As of right now, the curve is totally normal patterns. In 2018, the dark blue line here, you can see how price reductions ended the year at their highest point in 7 years because that's when rates were rising. So that's the pattern we're expecting for later this year. Slightly more inventory with slightly less buyer demand competition, with slightly more price reductions, getting back to a normal number of price reductions. So the market is normalizing, but is not yet normal, let alone any crash happening. Okay, that's all the time we have for this week. Despite rising rates, buyers are still buying. Prices are climbing like we'd expect in the spring. Even if recession is coming, that alone does not foretell home price declines. There's a link up here to the last week's webinar for you to watch that replay if you want to see the details on the home price, the inventory forecast, and that trend for the rest of 2022. By the way, we have a great new Top of Mind podcast coming out Wednesday. Stay tuned for that, especially if you are the agents and brokers in our audience. Check out the podcast, the Top of Mind podcast this week. It's a great one for you. Go to altosresearch.com to get the data and to meet with our team. Okay, that's all for this week. More next week.